Ladies and gentlemen, good morning. This is John Lambert, Senior Director at John Clegg Co. I was hoping you'd be able to see me, but unfortunately we've had a small technical hitch. I hope you can hear me. Welcome, one and all, and thank you for joining this webinar this morning. The purpose of the event is to launch our 22nd annual Forest Market Report. This is a report of the activity of commercial forestry sales throughout the UK. It has been an extraordinary year. We've had the challenges of COVID to deal with, but the market has continued apace. Our first speech this morning will be about that market. What interests me, though, is what creates a market, the sentiment, the objectives of purchasers. That drives and creates the market. We often see a range of bids from low to high. Why are values different from one person to the next? I know it's not necessarily to do with the depth of the pocket, but different reasons. Is that natural capital coming into play? Net zero? Who knows? The market is the people that drives it. We've got today 6 speakers, and I'm in advance thanking those for spending time putting together their presentations and coming to your screens today. Hopefully you'll be able to see them. At the end of those 6 presentations, we've got a dedicated question and answer session. If you look at the bottom of your Zoom screen, you should see a little Q&A icon. If you click on that icon, then you will be able to electronically send us your questions. Please don't wait until the end of the 6 presentations. Please do just send them along as you think of them, and we can then see the most popular questions and ask those questions early doors. We are scheduled to finish at 12 o'clock, and if our question and answers run over a little bit, then so be it, but I'm quite keen to put it to a close as near to 12 as possible. One other little bit of housekeeping, please note that this session is being recorded. That's just for internal purposes for ourselves. And I believe, without further ado, I can go on and introduce our first speech. That is to be prepared and presented by Bruce Richardson, Head of Investment and Property, Tilhill. Bruce originally worked in the financial services industry, holding a variety of senior roles in information technology, strategic planning, and business intelligence before deciding on a career change. After completing a master's degree in forestry, he joined Tilhill in 2012. He now leads the investment and property team, which provides individual and corporate clients with advice on forestry property acquisition, valuation, and woodland creation. Bruce is to present the facts and figures of the 2020 Forestry Market Report. Thank you, Bruce.
Thank you, John, for that introduction. I'm just hoping everybody can hear me. So it falls to me to start the meeting looking at the results from this year's report. So let's just start off by defining what the survey has covered. We're looking at commercial forestry transactions which completed between October last year and September this year. If we know of them, we include off-market transactions, but by their nature, we don't always see all of them. Yeah. Commercial forestry can be a slightly contentious term, but for our purposes, we define it as primarily conifer in character, greater than 20 hectares, that's about 50 acres, and that we're measuring the stocked or the plantable area in line with the purpose of the report, which is to talk about commercial forestry rather than general land values. We've been running the report for 23 years, so we've got a substantial database behind here. It's got over 1,800 transactions, just under 1.5 billion in value, and slightly under 300,000 hectares over that period. 2 caveats though, for people who are strongly into their statistics. Any individual year's data is based on a relatively small sample size, so it can be influenced by larger transactions, and too low level of granularity of analysis quickly gets you down to individual cases. But also it reflects what is actually sold in any one year. So with a different mix of properties in every year, care is needed in year-on-year comparisons. So in the publicity for this, we described it as an astonishing year. What do we mean by that, and how can we justify that? Well, frankly, it's been a record-breaking year. At £200 million of total value of the market, this is the largest that we've seen in our 23 years of the report, and it's up 58% from last year, which was at 126 million. The area sold has increased. That's now about 12,500 hectares, again up 13% from last year, but actually that's more or less in line with our 10-year average. So same roughly on average for the number of stocked hectares, but considerably higher value. As always, Scotland dominates, 69% of the sales by value. That's more or less what we'd expect. Slightly less expected really is that in England we only saw one substantial commercial property sold in the year, so they're down to 5%. We'd normally expect them to be about a quarter of the market. And Wales at 25% is much larger than normal, but again, that was one very large transaction. So it's a smaller sample size, only 61 properties, and we'd usually average around 80, which I think is a reflection on the lockdown, that it was actually harder for large chunks of the year to get out and about and have a look at forests on the market. But despite that, the actual stocked area has increased. And the thing that really worries us is, or the thing that we wonder about is this despite Brexit and COVID-19, or perhaps is it because of it? There's arguments in all sorts of directions on that one. Now, we would normally expect that the unit price of forestry will move in line with the price of timber, and perhaps with a small lag or a lead. So in this chart, what we're doing is juxtaposing the values from the Forestry Commission's timber index, which is the red line, with the unit price of a hectare of forestry to show that relationship. The unit price of forestry is the green bars with the values up on the right-hand side. And it's beginning to look rather disjointed. So where we have seen a correlation in the past between the two things moving together, in the last year, that doesn't really seem to have happened. It'll be interesting to see where we go next year, because certainly we've seen quite a bit of volatility in timber prices in the last year or two. And for those who are interested, there's a good section in the main report on timber prices and where we see those going. One interesting thing, though, is despite trying to see those two things moving together, overall the unit value of forestry sold in the last 10 years has gone up by 240%, and that's double what the timber index has done, which is go up by 100%. So the unit value of properties in this year's market has risen considerably from last year, and that's partly due to the mix of properties in this year's report, some very high quality properties we've seen this year, but also that it's been a very competitive market this year. Again, is this because of COVID, or is this despite it? I don't really know. So let's dig into those price rises a little bit. As you can see, from 11,500 as the average price of a hectare of forestry last year, to just under 16,000 this year is a considerable jump. And the most interesting, or the most surprising result this year is what we see if we have a look at the price of younger forestry. So we would logically expect that the unit price of a hectare of forestry would increase as the volume of timber in the forest increases. So I don't know if you're having a look at the bars here, which there's a bar per year. We would expect to see the price go up from left to right as the timber grows and there's more value in the timber in the forest, price is going up. But if you have a look at I suppose they're somewhere between blue and purple lines, which is the 2020 lines, what you can see is quite a smooth curve actually, with the younger forests at the age 1 to 10 years now reaching, in this year at least anyway, around about £28,000 a hectare, and a smooth runoff as you get closer towards the more mature forestry. And we've sort of seen that a little bit in previous years. If you have a look at the 1 to 10 year age group, you can see that that's gone up from just over 3,000 last year to about 11,000. And we've commented in the past that the younger forests are coming up in value very substantially. But we've not seen anything quite as marked as this particular chart at all before. Fenning will expand in the next presentation now a little bit about why some of those things are happening. But certainly in terms of the sample that we're looking at, it's due to some of the very high quality properties we've seen this year that have been sold in the younger age groups. Perhaps more expected is that in the older age groups, so that's 30 to 40 years and 40 years and above, prices have actually been very stable in the last year or two. And in a sense, that's not really surprising. With those sorts of forests, they're more or less mature, so we've got a known quantity of timber. We know in the short term what timber prices are likely to be. It's much easier to put a more accurate price onto those. So that's a very quick run through of the commercial forestry results, and there's lots more detail on all of those in the main report. But we'll move on now and we'll have a little look at mixed woodlands. So the mixed woodlands category is a much smaller niche in the marketplace, much smaller segment is probably a better word. And they're made up of generally they're smaller woodlands, generally with a much wider range of species, but with a character of more mixed broadleaves, and almost always managed with a wide range of objectives. This is it's always very difficult to try and describe different parts of the forestry market. And I'm beginning to think that rather than the species that are in a forest, we should be thinking about owners' objectives as a way of separating things. But at the moment, it's easier to talk about commercial and mixed. One slight word of warning when you read the report that in line with industry practice, mixed woodlands are measured in acres rather than hectares, which is what we measure commercial forestry in. Can be a little bit confusing unless you're good at multiplying or dividing by 2.47 every time you look at a number. So the majority of interest in this type of woodland is in England, with South England dominating, and that's reflected in the price. So £5,300 mean as an average price per acre in England, considerably less in Wales and much less so in Scotland, of course. We saw the market was really very quiet during the first lockdown, and as these woods tend to have quite a strong amenity element in the value, it's not surprising if people are struggling to get out and about that the market was slightly quieter. But it's rebounded very quickly since, and we're now seeing demand outstripping supply very substantially. There's a wide range of owners' interests in here, so it's a much more heterogeneous market. And it's much more difficult, therefore, to generalize figures in this market segment. The mixed woodlands have not seen the big price rises that we've seen in commercial forestry. So again, looking at the bars in the small chart here, Wales actually is coming up quite substantially in the last 4 years in the mean prices per acre. England has been very steady, and Scotland is up and down, but as I say, it's a much smaller market in Scotland, so it's driven a little bit by what's on the market. But the prices here are driven by a lot of factors. As we say, they've got a wide range of objectives. So prices are really not strongly related to timber prices in the same way that they are in the commercial market. You'll all be aware that new planting and the need for woodland creation has been hugely in the news in the last year, and rightly so indeed. Within the industry, most of us were cowering under our desks at the last election as politicians were outbidding themselves on the number of trees that they were going to plant, and we weren't quite sure where it was all coming from. However, after very good progress last year, It's slightly disappointing to see that this year we've planted more or less the same, around about 13,300 hectares, and we haven't moved, which is more or less what we had last year. So we've not moved very swiftly towards the 30,000 hectares a year of planting. Total planting this year, as I say, is more or less, that's the yellowy orange bars on here, more or less in line with last year. Scotland has remained fairly steady, to be honest, slightly down. England, we've seen a big increase actually, up to nearly 2,500 hectares last year, which is very encouraging. But 90% of that was in mixed woodlands. So it's England is still showing little progress in developing the commercial forestry. That's looking at the blue bars. And that's slightly worrying. I think a number of investors look at that 90% mixed woodland figure and ask themselves, well, is England really interested in commercial forestry? Would I be better taking my money to Scotland, where I'm clearly going to be welcomed? Wales this year was very disappointing. As you can see, the sort of orangey, amber, red bars disappeared. There was actually only 80 hectares planted last year. But this year we've seen very considerable improvement in the grants and the systems that are used. So we would expect to see a massive change in that when we're reporting this next year. What we are seeing quite substantially is interest from people who are planting for carbon objectives. And that's coming at all scales. So it could be anybody looking for a few trees to a few acres, up to very substantial commercial interests who've got quite a big offsetting problem if they're going to achieve net zero. And what we expect is to see some very large scale mixed woodland projects coming forward with carbon objectives in the next year or two. Carbon investors really looking with more mixed ESG, environmental, social governance objectives. So they're happy to take on more complex schemes. And that's going to make some planting in some of the more sensitive areas more viable, because they're not looking for very strong commercial returns. They're very happy to get involved in peatland restoration or biodiversity improvement, habitats improvements, and so on. If we look at woodland carbon in a little bit more detail, because that's been a big story this year, we've actually had a woodland carbon code in the UK since 2011, but with all the publicity, it's really the interest has really taken off in the last year. And you can see from the chart on the right-hand side, what a 50% increase in the number of hectares of woodlands validated in 2019. We don't have the 2020 figures yet, obviously, which really validated means it's a project that's been audited in very loose terms. So people are looking at this both from the perspective of buying their own units, so they're providing finance for other people to plant trees, but actually they're interested also in growing their own woodland carbon units. I'm not sure if that's quite the right phrase, but I'm sure you know what it means, that they're buying their own forests and developing them as part of their own net zero plans. Very much part of the complementary to the increased in natural capital, which Edgy will be discussing shortly. Worth noting really that it's only new woodland creation that's eligible for carbon funding, but for woodland creation now, carbon funding is becoming an important new funding scheme, and certainly within Tilhill we're now doing carbon calculations for any planting scheme we're putting forward. And we have new specialists in Tilhill who can help with the overall carbon market. Interestingly, the way the Woodland Carbon Co works is that mixed woodlands have got very strong carbon credentials, and that means that they can make less commercial woodlands commercially viable, if that makes sense. Won't go into the details of that at the moment, but that's the way that it works. And what we have seen during the course of this year is the launch of the Carbon Guarantee Scheme. That's a reverse auction scheme that I suppose the English is eligible only in England, which sets a floor price for woodland carbon, and that's been very interesting to see how that's developed. But it now means that people who are planting but have no intention of selling the carbon just at the moment, potentially have a guaranteed price at some point in the future. So that's more or less as quick as a run through of the overall results as we can take for today. Sorry, my apologies. I've killed my screen a little bit too early. I'm now going to pass over to Ed to Fenning Wellstead, who will be known to most of the people who worked in forestry in Scotland. Fenning is a director of John Clegg Co. Has worked for many years helping people buy and sell forestry, and has some very interesting views on some of the things happening behind the numbers that we've just been through. Fenning.
Thank you, Bruce. Good morning, ladies and gentlemen, and that was an interesting run through what's been a quite outstanding year. I'm going to look at what I think, or what we think, the key factors might be that are driving these values. A little look at what the effect of improved planting stock can be. And finally, and perhaps more importantly, a look forward with a reference backwards to previous centuries even. Let's start first with the factors that appear to be influencing what's happening. The first three here are all really points towards yield compression, which has a significant effect on net present value calculations. If you think back to the early part of the century, people were looking for forestry to return 6 to 8% in real money to compete with other investments that were returning 12% plus before tax. We're now looking at some people bidding for forests on compressed yields below 1% in real terms. We've put four more topics there, which are all really to do with other aspects of the future, particularly the whole green question and carbon sequestration. And all of that points towards planting trees. It's a very positive message. In combination, these factors are clearly having a very strong effect. But one thing which we believe is having a big difference in the forest is the realization that improved planting stock, superior genetics, is really having an effect. If I think back 15 to 20 years, some of the early improved stock looked a little bit sorry for itself a year or two after planting, but clearly now 10 to 15 years on, it looks very healthy indeed. Just for comparison, a 15-year-old yield class 20 crop, according to tables, would be about 8 meters tall, and we're now seeing crops at 10.5 meters tall at the same age. What this means is that, well, I think two things. Firstly, that a thinning at 15 to 17 years old is quite possible, and that harvesting can be done perhaps before the crop is 30 years old. These two factors, some income in the mid part of the rotation and a much shorter rotation, have a very strong influence on the present value of a crop. Now, Tim Liddon of Tilhill is joining the conversation for the question and answer session, and you might like to direct specific questions about improved stock to him. Let's just see what that means in terms of properties that have been on the market during this year. Glenhead and Arns, which is on screen just now, sold almost exactly a year ago, 22 years old, and sold for just under £23,000 per stocked conifer hectare. The assessed yield classes in there were above 20, perhaps to 24. And interestingly, if we move aside from the forestry crop itself, is that the sort of future use for marginal farming that we might like to see? A very productive crop of spruce, some sunlit, sheltered fields, and some repurposed farm buildings. Is that a sensible future land use? That's a question for us all. But here we are now towards the summer of 2020, and an 11-year-old spruce plantation restocked using improved Sitka and now showing yield classes approaching 30. This property sold for nearly £35,000 per hectare. Now it's 10 years younger than Glen Head, and yet it's sold for significantly more. What are the factors driving that? Well, one of them, I believe, is that the timber from this crop will be on tap in about 15 years' time, 2035, at a time when timber supplies are likely to be insufficient to meet demand, with a consequent knock-on effect, one imagines, on price. Let's just move away from what's happened in the market report for a minute and look at the Committee for Climate Change. These are notes I took from a presentation by Chris Stark, the CEO of the committee, and he picked up several headline points. New woodlands were required, and he was talking about 30,000 hectares per annum of new woodland planting. And as Bruce has just shown, we're not even achieving half of that. Big changes in farming. Farming is about 0.6% of GDP, but it's up to 15% of the carbon emissions, and therefore it's a target for change. Peatland restoration, that's self-explanatory. I won't say any more about that. Bioenergy, Chris Stark mentions 23,000 hectares of new bioenergy crops. That must be, by definition, on farmland, one imagines. And finally, changed diet and reduced waste. That contains a big social change with, by and large, a lower meat content in the diet and no exporting of that demand. We don't want to export the carbon from growing meat to other countries. His brief costing for that suggested it was going to be 1.5 billion per year of costs, but a £4 billion per year benefit. Now, clearly, natural capital accounting will be vital in assessing that. In thinking about this, I went back to a book I've been reading since I was at school. This was written 50 years ago, when the world population was half what it is today. And the author forecast that by 2018, more people would travel to more places. We'd be phoning home from the jungle by satellite. Computerized files would ensure that nobody dropped out, and your doctor would diagnose you remotely. I think we can all understand that that was a fairly perceptive crystal ball that he was using. But one of the things that he moves on to, and this is 50 years ago, remember, was a conclusion that materialism cannot win. How do we adapt? And one could argue that we haven't done much adapting since then. There was a disconnection between too many people who were now remote from each other's actions and effects. I think we can all sympathize with that comment. And responsibility. The human population was going to have to take control over the natural processes and manage them or lose them altogether. Immediately that raises the questions we're now discussing. How clean do we want the water, climate change, fertility and diversity? And we all like landscapes like this. How do we make these pay? That seems to me to be fundamental in where we're heading. Just let's convert that into woodlands again and go back to trees. We know that Britain is very underforested compared to the rest of Europe. We know that within Britain, the percentages are low. England is desperately low in terms of woodland cover. Southwest Scotland is probably above 30% cover. And we also know that while we would like to have lots of Sitka spruce to feed the factories, provide us with toilet paper, cardboard packaging, housing, and so forth, we don't want every wood to be a wall of Sitka spruce. But fundamentally then, what do we want to do with this kind of marginal farmland? Remember, that the UK forest cover is only 13%. 1% of the UK is about 240,000 hectares. Therefore, to raise the cover by 1% at 30,000 hectares per annum takes 8 years. And as we reported earlier, we're only achieving half of that figure. So we're 16 years at the present rate to get cover up to 14%. But if we look at this land, when I was a child, when Gordon Rattray Taylor was writing his book, this was heather, very strong heather. The trees in the foreground, which are now a replanted crop on a harvested site, that original crop struggled through heather check. What do we now want to do with that, to my mind, slightly degraded farmland? Do we restore the fields? Do we plant trees on the middle ground and leave the open hilltops to go back to heather? Bear in mind that the management of this kind of landscape is entirely subsidized by the public taxpayer. Without that subsidy, the business of farming doesn't work. Neither, perhaps you could argue, is the business of forestry work. But it used to. If we look back into the 1850s, here's a landscape where shelter belts were planted, where farmers understood the benefits of shelter. The crops were warmer, the soil was effectively more productive, the livestock was sheltered, and by the by, perhaps we would have some timber out of these woods in the long term. And that was done without subsidy. That was simply good husbandry. But we're very much at risk of losing this. Here's another photograph, just 20 degrees different in angle, taken from the same spot, of hillside which is hardly got any trees left, gorse coming back. Even the hedges along the roadside in the middle distance on the left there are no longer hedges. They're trimmed by some machine, but it's basically a bunch of shrubs. What are we wanting to do with this land? That seems to me to be a key question. Here's a possible answer. Here we have, still at the top right-hand side of the photograph, some open heather on the top. We've got productive conifer plantations. Lower down on the left, we've got some mixed deciduous woods. Unfortunately, some of that's larch, which might succumb to disease, but we've got some mixed woodlands. And then on the lower ground, some sheltered parks, some of which would benefit from a bit of drainage. And we've also got recreation going on, a caravan site, holiday park. Is this a more acceptable mix? And who decides? The question came to the fore about a fortnight ago in the weekend press. Exmoor National Park Authority had proposed an idea of rewilding parts of Exmoor. And this was being challenged by the farming communities as a rich man's toy. But what is the future? Are we trying to head to some bucolic past that we imagine is a nice thing? Or are we heading to a future that can blend all the different pressures we seem to be able to think of? And I'm also wanting just to stress the importance of time and the change in the subsidy system. Here's a hillside which 10 years ago, when the subsidy was a headage-based payment, was as bald as a coot. Now, subsidies are area-based. We can still see a few sheep on the hillside, but their numbers are now so reduced that willow and other scrub is beginning to colonize. If we give that a little more time, what will the future look like? And how will it look when this little man moves in? Do we understand the effect of the things we've already put in train and how they will affect what the countryside looks like and what it will do to individual people who work on the ground? Remember, we're dealing with people's livelihoods. A lot of the planting that's been done in Scotland over the last 20 years has been to restore mixed woodlands for conservation basis, something which I think is extremely important in meeting climate change. But these have only been achieved behind deer fences because the browsing pressure is too great. How do we manage that for the future? Deer fences are expensive, they disappear when there's heavy snowfall, and no one's going to maintain a deer fence around a wood like this in perpetuity. So how does the woodland regenerate? We need fewer browsing animals. what happens if we reintroduce something like this? Who decides? So you can see, and I'm enjoying Green Finance Observatory's cartoons here. You can see that ecosystem services covers a whole range of topics. If we take the apple tree with its fruit as the productive side of forestry, from which we take a yield, whether it's timber or anything else, there's also the animal systems, the water, soils, and so forth. And each of these has their own lobbyist. Who's going to meld that together and on what basis? And that's why we need a balance sheet. We need something that can account for the different parts of this into a format that we all understand and agree is a sensible basis to make decisions on. And that is what EDGE is going to talk about. We need to try to pull the whole thing together into an acceptable pattern of land use. Now, before EDGE speaks, I'm going to hand over to Stuart Goodall of CONFOR, who will take you through the strategic and political setting in which forestry is operating. Stuart and his team have been instrumental in raising forestry's profile as a sustainable land use and as a key component of the rural economy. Stuart.
Okay. Thank you very much for that, Fenning. That was a very thoughtful presentation there. As Fenning says, I'm going to be speaking to you about the outlook for forestry in the UK, looking at the political context, the impacts that governments can have on the industry. I'll look at the timber market, both in the UK and beyond, and I'll also throw in a touch of climate change, nature, crisis, and Brexit. Just a quick thing, looking at this first slide, this is something that we created as a corporate backdrop a few years ago, and a sign of progress is that the area on the right, the unplanted area, is actually since then been planted. So there is progress in achieving our planting targets. If I look at the current situation in terms of what the politicians are seeking to do to support the sector, broken this into 4 areas, looking at planting, encouragement of the use of wood, timber, management of existing woodland, and support for the sector. Now, what we can see is that we are starting to achieve good planting levels in Scotland, and an intention of trying to deliver 60% of that being productive, and about 40% being more for nature values. We're getting very close to that. We say 66% conifer there. That includes Scots pine, which may have been planted for nature rather than for production. Turning to England, as Bruce has already highlighted, there was an uptick in planting in the last year, but actually a decrease in the area of conifer planting that took place, which is disappointing. Turning to Wales, 80 hectares didn't even feature on the graph that Bruce presented. And my feeling is if I gave my 3 daughters a spade each, they could probably outperform Wales, although of course child labour is not to be encouraged. Turning to timber, Scotland has been very good here, leading in terms of encouraging the use of wooden construction, and there are actually targets that the Scottish Government has for that. England, not quite yet, but I'll come on to that. In Wales, there's been a desire to try and encourage the greater use of Welsh wood in Welsh homes. In terms of management of the existing woodlands, the forests, that can often be seen as a poor relation in terms of government support. In Scotland, there's some support for restock, for infrastructure, for machinery, etc., but less so elsewhere. And if you look at the sector as a whole, how government looks to work with CONFOR in the industry in terms of promoting the sector, we've got in Scotland an industry group which exists, and that's starting to bring public and private partners together. We have an apprenticeship scheme and a long-standing timber transport scheme which provides considerable support to help get timber to market from inaccessible places, but also to take pressure off timber wagons going through rural communities. And in Wales, we're starting to see interest in apprenticeship schemes and skills training, and they've set up an industry group as well. What that's leading to in terms of planting, or conifer planting, we can see from this slide here. So there has been a definite increase over the last 10 years. But as highlighted, it's really Scotland that's shouldering the burden, or as I would like to put it, is realising the opportunity and the benefits of delivering that planting. If we start to look ahead in terms of future commitments, in Scotland, I'm really pleased to see that we're expecting there's going to be over 12,000 hectares of planting taking place this year. We're seeing perhaps 22,000 hectares of interest in planting coming through the pipeline. These are very strong figures historically. And the government has set a funded commitment of 18,000 hectares a year of new planting by 2025. In England, as we've heard there in the last election, and it was reaffirmed by Boris Johnson as part of his 10-point plan for green recovery, they want to deliver 30,000 hectares of planting across the UK. They're developing an England tree strategy, and there's £650 million of funding has been made available in a Nature for Climate Fund, which will also cover peatland restoration. So that's delivering an intent. What we need to see is then planting happening on the ground. And one of the big challenges we've got there is, it was alluded to by Bruce earlier, if you have money to invest, you're tempted to go to Scotland where you feel there's a proven ability to deliver. England needs to demonstrate that it can attract that, and also to persuade people who want to plant on their land. It doesn't have to just be land sales, farmers, estate owners, to plant on their own land. And I'm sure that William Worsley may say something about this later on. Chair of the Forestry Commission has a key role to play in delivering this. Looking at Wales, there's been a strong aspiration for some time, 4,000 hectares a year, 80 hectares was the delivery. But what's really positive is the Welsh Government is starting to put money where its mouth is and putting significant funding available. And that funding has been very quickly spent, showing that there is an appetite there. And hopefully we'll see a big uptick in there in the coming years. Looking at the timber side of it, the supporting of the greater use of wood, Scotland has raised its ambition in September, and it's what it called its programme for government for the next few years. In England, really positive to see that Zach Goldsmith has embraced this. It's been a commitment in the past, but we haven't seen any real action. And I had a very good conversation with Zach Goldsmith recently where he was setting out his views on how we can deliver more planting in England in the short term. There's the Nature for Climate Fund, but there's also this support for how we can grow the market for timber and construction, to provide that confidence to people to plant, that there is a government support longer term, and how we can ensure the strong markets. And I also understand they're looking at how government departments could identify land of their own to plant with trees. In Wales, there's definitely a growing desire to use more Welsh timber, but what we need to see is more specifics. Looking at management in Scotland, we're not seeing anything additional yet of substance. In England, this could be where England really comes to the fore. Very exciting ideas around environmental land management support, and that would see significant funding provided to the land use sector, with existing woodland being included for the first time. That's not going to happen for a few years yet, but at least we're seeing some real positive thinking and work in progress there. Wales, again, nothing really of substance to highlight. Moving on to supporting the industry, Scotland's looking at further how we can get timber to market, reduce road miles through moving timber by rail. In England, we're seeing the development of a public-private industry group starting to catch up on what's happening elsewhere. And in Wales, greater interest, again, in looking at apprenticeships and supporting that. CAP has been a key issue in terms of the attractiveness of planting. Essentially, if you're receiving money every year guaranteed by the EU for producing farm goods, why would you want to switch to tree planting? It makes it that much harder. Leaving the EU has a fundamental effect. It takes away that commitment, that legal requirement for UK and devolved governments to keep paying farmers money every year to farm. We now have the opportunity to be able to come up with a bespoke means of supporting the rural economy. That will take some time. As you can see here, looking at the 3 countries of Great Britain, there is a transition period. Government's not just going to pull the rug from under the feet of the farming community, and neither it should. What we need to do is to be able to provide for a transition to a new way of thinking, a new way of supporting rural areas, starting to recognise public benefit with public money, and looking at how we can support greater economic resilience. And the interesting thing for me in this is the work that we've done, where we've commissioned studies by the agricultural colleges. It shows that forestry is actually, commercial forestry can actually deliver a higher return to especially marginal sheep farming than even the existing cap payments, never mind the future situation. So we would expect to see greater interest arising in tree planting. Climate Change Committee has been key in a lot of this. We've worked very closely with the Climate Change Committee, the statutory advisors to the UK and the devolved governments, on how they achieve their 2050 or in Scotland 2045 targets. And in particular, what we've seen in the last couple of years is net zero, and net zero is hugely important. Prior to that, the focus was all about emissions reductions, and environmental organisations were very hard on pushing governments to focus only on that. You were seeing taking carbon out of the atmosphere as perhaps a way of escaping responsibilities. But what we're recognising is each year, as we go along, it's proving incredibly difficult to achieve those targets. Like so many things, the low-hanging fruit's being taken. The hard yards are still to come. And therefore, we need to see the role of carbon capture and storage coming to the fore. And forestry is a proven way of doing that. Proven, and it's relatively cheap. So I would expect that the Committee on Climate Change will continue to be an important vehicle for advising governments on the role that tree planting can play, that appropriate management can play, but also, really importantly, that wood products can lock up carbon and then can displace higher energy materials like steel, concrete and plastics. It was interesting, Bruce was making the point about the divergent situation, the assumed correlation between timber prices and the value of forests. And this is how we've seen timber prices panning out over the last 8 years. The interesting thing for me is that while we see up to March 2020 a falling away over the previous year, what I'm really looking forward is to see the statistics coming out so that we can look at March 2020 to the end of 2020. Because as I will touch on, we've seen significant increase in demand for timber within the UK, and a reflection of that has been an increase in prices. So that those lines have started to go up again. Why has that been happening? Well, the market impact out there has been driven by a number of things, both within, as I said, the UK and elsewhere. What's been really interesting for me is during lockdown, large numbers of people had time on their hands, they had money they couldn't spend on holidays, and they were looking at their homes as the places where they're going to spend their time. So what are you going to do? The answer is they invest in projects, they invest in expanding their house, but they also invest in new decking, they invest in new fencing, they invest in sheds and in outdoor bars. There are outdoor bars popped up all over the UK, though I suspect probably more of them in the south of England and the north of Scotland because there are weather issues. But what this is all added up to is a significant increase in demand for timber. And that's been happening at the same time as there's been an increasing worldwide demand for timber. US housing, as you can see in the top right, has shot up, and that's resulted in significant timber price increases. And it's also resulted in countries like Sweden, other countries in Europe, who would look to the UK as a typical market, a home market, in fact, for the Swedes. They are now shipping timber over to the United States. China's bounced back, and they're using more timber, and that has started to create more international trade flows elsewhere away from the UK at a time when there's been good demand coming through. And interestingly, Ireland has always been, the Republic of Ireland has always been a key supplier into the UK. Over there's been a fascinating situation happening. New legislation came a couple of years ago, which allowed people to object to planning decisions, including the licensing or the felling of timber. Anybody could object, and no financial penalty for objecting, and then suddenly everything got gummed up as environmental organisations protested against what they see as the type of forestry they don't like. And that big chunk of potential exports into the UK effectively was shrunk significantly and has been for some time. It's starting to unwind, but that could still take another 6 months or more. Looking longer term, I'm always fascinated that it seems almost every year a new organisation, international organisation, comes up with their projection for the increased demand for timber in the world. Last year it was the OECD predicting a tripling by 2060. Here's some work that was undertaken by an organisation involving WWF looking at new generation plantations. The focus here is how globally we can encourage more tree planting. The challenge is that consumption of timber is set to increase so significantly that we're not going to be able to plant to keep up. So how do we manage that? That's a real resource issue, as there are for many raw materials. But for us in the UK context, as somebody looking to invest in forestry, it's a very positive backdrop. Focusing in just on recently what's been happening in the UK timber market, there has been that strong demand which I referred to, and therefore prices for conifer sawlog have been very strong since July. The fencing market has been easing off in the last few weeks after an exceptional autumn. That's a normal seasonal effect, but what we're seeing is the construction market still remaining strong. There's been demand for the demand for smaller log sizes has been weak. In part, that's because the sawmills have been very active. They're producing co-product. They have an art of turning cylinders into rectangles, and the bits that aren't rectangles, they sell elsewhere. And some of that competes with the smaller log market. However, we expect the energy market to kick in, and that will increase demand. Hardwood sawlog demand is moderate. Nothing to write home about. But thankfully there are export markets for ash, beech and poplar, and that's meant that the price in the market for sawlogs have held up reasonably well. Currencies are always key. Ultimately, when sterling is weak, that gives domestic producers a price advantage. And as we can see here, sterling has remained weak against the euro for the last 4 years, and similarly against the Swedish krona. And that's very important because the Swedes are the biggest exporters into the UK. Touching now on developments that which impact on the sector, which we need to be mindful of. Carbon is hugely important. As I said, it's driving demand for wood products. It's driving interest in planting to offset carbon, and it's driving government's desire to see growth in the sector. And we expect that to continue, not least because in November 2021, the UK will be chairing COP26, where all the countries of the world come together and reaffirm and strengthen their determination to tackle climate change. But we're also seeing real interest from environmental organisations about what they call a climate crisis. And this is hugely important for us because there's a danger that if we're seen as a one-trick pony, that planting trees simply to lock up carbon can miss the bigger picture here. But equally, it's absolutely vital that those people who look at commercial forestry and think it is a one-trick pony realize that it's not. So we were very pleased to be launching a publication where what we did is we pulled together the evidence. We consulted with the government departments, with the Government Forest Research Agency, with NGOs about pulling this together and getting case studies together. And what we feel very strongly and very, comfortably and credibly is that demonstrates that there's really strong story there for commercial forestry. It can deliver for carbon, it can deliver for jobs, economic growth, and it can deliver for wildlife. And that's something that we'll continue to focus on in the coming years. As I said, I was going to touch on Brexit. I like to just keep on top of what's currently happening in terms of negotiations. We're working on the basis that there will be a deal. I was rather tickled this morning by a headline in the Times, which was Brat to Wurst, which was essentially, could negotiations be knocked off course by restrictions on trade in uncooked meats, including sausages. I'm optimistic that that won't be what blows Brexit negotiations off course. But if it do, I could offer to the Time copyright headers the headline, "Bangers Explode Trade Talks." But hopefully that's not something we'll be seeing soon. I think the key takeaway point here is that no matter what the outcome, the trees will keep growing. That's a truism. But equally, we've looked at what we feel the impacts could be of a no-deal situation. And there are some, but they're relatively minor, where there will be issues of getting the right people in to plant the trees, to operate our machines. But we've shown resilience in that in the past, and I feel we can show that in the future. The currency impacts will probably be positive in terms of weakening sterling. And in terms of exports, as a country, we're not relying on exporting timber. So as long as we have parity in tariffs, that shouldn't have a significant impact. Right. Thank you very much for listening. I'm now going to hand over to the dazzlingly handsome John Lambert, and I just hope that we can see him this time. But if not, his mellifluous tones will join us again. Thank you.
Stuart, thank you very much for those kind words. Unfortunately, the technology has still beaten me. Stuart, thank you for that insight. It's greatly appreciated. And can I also take this opportunity to thank you and your colleagues at Confor for all your continued hard work. You literally kept elements of the industry on the road through lockdown. And I know there are many different industries out there that are grateful for your hard work. Ladies and gentlemen, please keep those questions coming. You've sent in a good number, but do keep sending them on, and we will come round to those at the end of the session. It gives me pleasure now to introduce our next guest speaker. AJ Ozda-Marulo is the founding director of FTech. AJ is an environmental economist specializing in natural capital accounting. Her work spans many sectors, including farming and forestry. She is a member of the Committee on Climate Change Adaptation Committee and the convener of the British Standards Institute's Assessing and Valuing Natural Capital. She is currently writing a standard on natural capital accounting. We are most grateful to her to present her paper, which is entitled Valuing Natural Capital. Thank you, AJ.
Thank you very much, John, for a wonderful introduction. I feel very fortunate to be here talking to you in this astonishing year, as Bruce put it, and it is very good to follow Stuart's presentation on the realities on the commercial policy and political worlds. And I hope I'll do my best to do justice to Fenning's lead-in to natural capital. I will talk to you about valuing natural capital, in particular in the context of improving the way that we account for all the benefits that forests are capable of providing for a business, but also for wider society. Valuing here is can be anything, even though my presentation and the case study that you'll see in the report focuses very much on using money as a metric, because we want non-commercial benefits to be comparable to the commercial ones. But it's a process. Valuation is a process that involves qualitative assessments, many biophysical metrics, and lots of sort of socioeconomic factors thrown in there as well. So bear that in mind. It's not just about monetary valuation of environment. It is about really broadening our understanding of what we can get, how we can manage our natural assets, and use the accounting framework to help us. So I will endeavour to answer these 3 questions, and I will focus on the case study that's presented in the report. But Fenning asked a lot of questions about what we want, and I think the answers to those questions don't come from a single analytical approach or a single policy or a single sector. The answers require conversations within a sector and across different stakeholders. And our job as environmental economists and advisors is to provide more and better evidence to those conversations. Our analysis, whether it be accounting or policy design, don't make those decisions, don't provide full answers. But I hope you'll find the kind of information that I'll present to you an interesting contribution to the conversations that you're having. So forests are capital assets. You know this very well, better than me, because you're managing those assets and you're putting your money investing in them. I'd maybe encourage you to think of forests as a natural capital assets from now on. Why is that important? And I think it's important to think about nature as a capital asset amongst other ways of thinking about nature. There are many impacts and dependencies. In many ways we rely on nature, not least forests, but this is just one way of framing our relationship with it. There's one very important reason why we want to frame forests as a capital asset, because when they are capital assets, we look after them. Again, it's not very new to you perhaps, but it's new to many other sectors who are only just beginning to become aware of their dependencies on natural capital assets. And that awareness is not only for natural capital, but for other capital assets as well. Traditionally, we've focused on how we're doing in terms of our financial and manufactured capital. Lots of our KPIs, lots of our financial accounting systems are really geared towards covering those two. But increasingly, we are paying attention to natural capital and also social and human capital too. Natural capital, actually, following Fenning's example of a reference to an older literature, the first time I could find natural capital mentioned in the literature is back in 1973 in a book called Small is Beautiful by Erich Schumacher. And he makes the point very clearly that actually it will help us to think of our relationship, inputs from nature, as a capital asset, because we look after capital assets. It has become more popular in the last sort of 5 to 10 years, partly because of the efforts of a couple of groups. One is the Natural Capital Committee, which was set up as an advisory independent committee to Cabinet Office, and the other is Natural Capital Coalition. I refer to their definition here, and they're now called Capitals Coalition because they're looking at both social and human. So natural capital is basically everything in, under, on and above land, water and sea. Why is that? Why we're not just talking about nature is to home in this idea that if capital assets, if we maintain them, they will keep on giving over long time. And social and human capital, we won't talk too much about them, but actually there are, depending on how you managing forests, you also can give rise to improvements in those capital assets. So what is changing, and some of this has been covered, but what's changing is that traditionally we thought nature is something that's freely available, substitutable, so we can run down natural resources as long as we built up some other capital, like we build infrastructure, we put money in the bank, and it's self-maintaining. It'll look after itself, and it's somebody else's responsibility. But more and more we're seeing changes in this understanding, from my perspective, for perhaps three main reasons, three main developments. One is that consumers are demanding social responsible products, and not just products in terms of, say, certified sustainable timber, but also in terms of investment products. They're wondering where their pension money is being invested, for example. The policy is changing. I think all the speakers mentioned about changes to common agricultural policy, and we'll come to that, I'm sure, in the Q&A. And there are also other policies like biodiversity or environmental net gain, obviously developing capital markets, etc. And there are changes in the investors, and there could be investors that are near the asset, so they are beneficiaries. Say water companies could become investors if they want something to happen upstream, so that the water quality and quantity that reaches them is improved. Or it could be remote investors from the city, from investors who are interested in diversifying their portfolio, but perhaps becoming more aware of the environmental risks that are faced by their portfolio as well. So they want to take action to protect the portfolios. And there's lots of leading from, including Bank of England and other banks, to improve that risk profile. So what does that mean is that maintaining natural capital is hopefully becoming a financial sustainability issue for businesses. So not a nice to have, not just a corporate social responsibility, but fundamentally important for the sustainability of businesses. And new markets are emerging. We mentioned carbon credits, voluntary markets at the moment, but could improve. Biodiversity net gain, discussions that will come with the Environment Bill, hopefully, Environmental Land Management Scheme in England and Equivalence in Scotland and Wales. They are asking for bespoke approaches, understanding how to measure various benefits provided by forests amongst other natural capital assets. And I put the introduction too deliberately there, because we're not, whilst all this awareness is growing, we're not having to invent these approaches at a rush. This kind of work, my colleagues' work, have been going on for decades. But it's just we haven't had much audience outside perhaps policymakers in public sector to share this. So it's very exciting times for us. So let me come to the forest and its many benefits. Forests are perfect examples of what natural capital assets could do. And you'll see this chart in the report. The color coding is to do with the coverage that I provided in the case study. But overall, timber and other commercial products are the only ones that we capture in our financial accounts, whether it's balance sheet or profit and loss. Carbon we talk about, of course, and trees, clean air, we know that. And they could reduce flood risk. They could become part of the flood risk management. But in some places, they might actually have a negative impact on water supply. Recreation, health and well-being benefits, of course, not just because people spend money when they come to park their car somewhere or at the visitor center, but health improvements of being engaging with natural environment. And it's possible to quantify all these benefits. It's possible to put some of these benefits in monetary terms. their provision depends on the location of the forest, the species mix, the way the forest is managed, and there are trade-offs even within these environmental and wider society benefits. You can't provide all of them. You have to have priorities. Who will determine priorities, as Fenning was asking? It could be the manager of the forest, but it's influenced by the policies and markets that are out there. The key thing here is that you need to arm yourself with lots of information about what the forest is doing in that particular location under different forest management scenarios, perhaps. We've done this for a paper and pulp company. I won't go to the details, but what difference does this make? This was a particular company that was very good at publishing their corporate social responsibility reports, and you can see that only a very small part of their assets on the left and the benefits on the right could be captured by financial accounts, many more in ESG, environmental social governance analysis, but in many different metrics. So it was very hard to compare the commercial return and social return to their management of their forests. And with a natural capital accounting, you could do both. John, in his introduction, mentioned that I convene a technical panel for British Standards Institution, and tomorrow we're launching the public consultation for a standard on natural capital accounts. And there are two types of accounts. One is balance sheet and the other one is income statement, just like financial accounts. There are differences between the way these two accounts, the sets of natural capital and financial accounts, are prepared, but the principles are very similar. And I have used the requirements of that standard when I created this case study. I say I, but it was with enormous help from colleagues in John Clegg Co and Strutt Parker and my colleague Natalia Karadi at FTEC. Balance sheet answers these questions. What assets do you have? What are they doing for you? What are they doing for others in the society? How do your operations impact the quality and quantity of those assets, and therefore their ability to keep providing benefits? And what are the implications of your different management scenarios on the assets and on the benefits? And we're trying to present this in a familiar format, as Fenning said. You could make this very complex. You can spend many PhDs answering each of these questions, but we're aware that we have to be pragmatic, we have to be robust and transparent, but pragmatically input to your conversations and decisions. So this is the balance sheet that you will see in the report, and you'll also see a lot of notes about how individual rows have been calculated. But overall, what the account shows is asset values on the top, as you would have in a financial balance sheet, I guess, and liabilities slightly differently interpreted at the bottom. So we separate between production costs and maintenance costs, and it's quite difficult to find out what maintenance costs are and what they're doing to the quality and quantity of the forest in this case, and their impact on the benefits provided. In the columns, you'll see for this particular case study, which we assumed a 200-hectare new planting, the baseline is a farm in marginal grazing and in lowland areas. We would normally include some basic payments and returns, and therefore provision of environmental and social benefits from this farm, but for simplicity we've kept that kind of analysis out, and to match we've also kept public fundings for forests out of this table as well. In scenario 1, you'll see it's a majority conifer plantation. In scenario 2, it's the same as 1, but we also allow for recreational access. Each row under the asset values show the kind of environmental benefits and commercial ones, including commercial ones, I should say, that this forest could provide. And we made assumptions about harvesting rotation and amount and price, and cost of getting the timber out, but also cost of replanting. In this very simple exercise, we assumed that replanting is part of the maintenance costs, because by replanting you are helping for the benefits to grow. You could of course do many other things. What this particular example, the numbers are just for, dependent on the assumptions you make about a particular case study. Please don't take these numbers to be generally applicable. You'll see all the assumptions in the report. And also some of them are potential. For example, in air quality, sorry, let me just go to the top. So timber is commercial assumptions, as I said. Carbon sequestration, we use the Woodland Carbon Code to estimate the amount of carbon, matching the harvesting rotation with some clear felling and then replanting parts of the land. For air pollution, air quality, we used a model that we developed for Office of National Statistics for their national accounts, and that estimates the ability of the vegetation cover to absorb particulate matter 2.5. Now, the numbers we use in this case are regional averages. Of course, this value would go up if your forest is near a population center, because what the benefit is that if you absorb pollution, you avoid health impacts of that pollution and you save medical costs and other costs, and those costs appear here as pound values. And the more people you protect, the more benefits you generate. For flood risk reduction, we used a publication by Forest Research that is estimating how much water forests can keep and therefore reduce water quantity rushing downstream. And the valuation basis used for this is how much it would cost to build a storage reservoir that can hold equivalent amount of water to the 200 hectare forest that we have. You can make these very, very sophisticated, of course. There's no discussion of mixed species here. We don't know exactly where the case study is. We used regional averages. But just to demonstrate that it is possible. And for recreation, we use a Natural England's mini survey that went on for about 10 years and it's only stopped last year. And based on that data, mini was monitoring engagement with natural environment, and all that data turned into a recreation modeling tool that's available online called Orval. It's developed by University of Exeter for DEFRA. And you can click on a map and you can create new paths, or you can see existing paths or areas, parks, etc. And it would tell you what's the likely of number of visitors you'll receive and what welfare and health benefits they would get. And you add them all up and you take away the costs and it gives you a bottom line. Now, I would urge you against reading the bottom line in this particular case study, but in a actual application, what this format encourages you to think is, am I spending enough money on maintaining my forests so that it can provide these benefits? Am I spending that money on the right type of actions? And only when you're confident about the answers to those questions that you can read the bottom line as you would normally read a balance sheet. What would really carry through, I think, and it carries through on all the 60 plus accounts I have now overseen in the last 5 years or so, is that what financial accounts capture is a very small percentage of what the potential benefits the asset can provide. In this case, you can see the numbers. And these benefits are excluding some things like water quality, education, volunteering, very importantly biodiversity value, and landscape value, though I think some of the landscape is probably captured in the recreation stuff. I'm happy to answer more questions on that. But I did some extra scenarios for this presentation that's not in the report. And I thought, well, what if this forest was broadleaf forest? And what if it was conifer, but we looked at a much longer period, which we would do with broadleafs, like 100 years. And you can see the sort of relative comparisons of these benefits. And it is, I think what Fenning was saying, that it's good to have all these benefits for the society, but there will be trade-offs between them. You can't deliver all of them to their full potential. And that's why these bar charts would look differently depending on where your forest is and what you're managing it for. And I understand Forestry England is producing a tool now to help forest managers to prioritize these benefits and give advice on management. You'll see that the sort of carbon potential is quite great. This is not sales in carbon markets. This is using the base valuation on top of the Woodland Carbon Code. Base is social carbon price. So it's the social benefit of capturing carbon. It may or may not match the market price of selling the credit. But it shows you differences. It's basically what this tells me is that the longer you leave the trees on the ground, the more benefits and the more of those benefits you will get. And the relative sizes of different colors in the bar charts would depend on how you're managing the forest. Just a couple of slides. This is just the detail. Oh, I've already talked to. And just to reassure you that this is not an isolated case study. It is actually, there are loads of examples coming through, and there's a standard, and Forestry England has actually done this about 5 years in running now. And you can, if you typed Forestry England natural capital accounts, you'll find them all in one website. What does this mean? This is my final slide. Rethink about financial accounts, ESG, KPIs, internal processes to answer the questions that Fenning posed. Join the BSI public consultation for the standard and forestry. Check out the Forestry England tool, but also generally think about what different forest management styles would lead to, and do please engage. I think there are lots of questions about these policies, and I'll kind of give some answers on the environmental land management scheme later. Do please engage with these developments, and thank you very much for your attention. I'm sorry if I've overrun a little.
AJ, thank you very much indeed. A phrase that has come into our daily use almost over the last 6, 9, 12 months, and I'm sure will continue to have continual effect in the immediate future. Thank you very much indeed. Our next guest speaker is Sir William Worsley, the Forestry Commission Chairman for England. Sir William owns and manages woodland in North Yorkshire. He was the government's national tree champion from 2018 to 2020 and chairman of the National Forest Company from 2016 to 2020. A former president of the CLA, he is currently president of the Yorkshire Agricultural Society and chairman of Hovingham Estate. He's also chairman of the Howardian Hills AONB Joint Advisory Committee and a fellow of the Royal Institution of Chartered Surveyors and of the Royal Agricultural Society. Sir William is to present his paper entitled Why Plant Trees? Thank you.
Well, John, thank you very much. I'm sorry not to be seeing you all in person. It's the challenge of today's way of working. But I have to say, this form of meeting does cut the cost of our carbon emissions, as we don't have to do any traveling, which is, I think, a positive. Now, I'm sure you've all heard of the policy for tree planting. The Clean Growth Strategy in 2017 set out plans for reducing greenhouse gas emissions under the terms of the Climate Change Act. And the headline scenario included 130,000 hectares of woodland planting in England by 2032. That's 320,000 acres. I mean, it's a very significant area, plus 50,000 hectares of energy forestry and increased homegrown timber in construction. the 2018 25-year environment plan set out aspirations for 180,000 hectares to be planted in England by 2042 on the path to 12% woodland cover by 2060. And in their 2019 net zero report, giving advice to government, the Committee on Climate Change recommended that planting should increase to 30,000 hectares a year across the UK. And that there was also a crucial role for domestic biomass. And they'll publish their advice on setting the sixth carbon budget on the 9th of December, so we'll see. And of course, the Conservative manifesto committed to increasing planting rates to 30,000 hectares a year, that's 75,000 acres a year across the UK by the end of the Parliament. And of course, the Chancellor announced the £640 million Nature for Climate Fund to plant more than 40 million trees and restore 35,000 hectares of peatland across the UK. As you can see, the Forestry Commission, DEFRA and delivery partners are designing the NFC tree planting programme to go far beyond the traditional demand-led woodland creation grant scheme, although we're working hard on an improved grant regulation and guidance offer, although I can't give any further details on this today. And the main, but not the only driver beyond all this, all the policy support is of course carbon. However, we must put this into context as forestry is not the silver bullet. It's a contribution, and really in the medium to long term and not in the short term. And the wider challenge for society to regulate greenhouse gas emissions and limit the impacts of climate change. The timber stack here is the result of an ice storm in Scandinavia, so you can see the impacts of climate change. Now, there's been plenty of discussion in the media recently about what is the best woodland to plant for carbon, and quite frankly, the answer is all, as long as the species are well matched to the site and the site is appropriate for planting. Forest Research have published some really good material that explores these issues, and the graph shows that, as most of us know, conifers get going much quicker, particularly the high yield classes, but broadleaves generally have higher carbon stocks in the very long term, and unthinned woods, unsurprisingly, have higher carbon stocks than thinned woods. But there's also the need to consider the benefit of management on habitat quality, and also the role harvested wood products have in reducing greenhouse gas emissions, and I'll go on to mention this. And please note this graph is in tons of carbon, not tons of carbon dioxide. And if you calculate the average carbon stocks over typical rotations for different woodland types, you arrive at an objective analysis. But bearing in mind that this does not cover harvested wood products. Of course, the rate of carbon uptake is dependent on getting the species right and the soil and climate of the planting site. Now, these two maps show the potential carbon sequestration over 50 years in tons of CO2 for conifers on the left and native and naturalized broadleaves on the right. The biggest difference is in the west, where more abundant rainfall gives conifers a very significant advantage. As I said a little while ago, when looking at the full story of forestry's contribution to reducing greenhouse gas emissions, you also need to consider the role of harvested wood products. Wood products continue to store carbon throughout their life in use and can save further emissions if used for generating heat and electricity at the end of their service lives. Extending the service life of homegrown timber through more timber and construction, for example, can contribute to meeting carbon targets. Wood products also contribute to meeting carbon targets by substituting for materials which have high GHG emissions associated with their production, such as concrete, steel, and aluminium. A recent review concluded that these substitution savings were broadly equivalent to the amount of carbon stored in the wood product. Tree planting has had so much policy support because it's considered good value compared with other options for meeting carbon reduction targets. And this graph is the marginal abatement cost curve supporting the 2017 clean growth strategy. MACCS show the cost per tonne of each carbon saving option on the y-axis and the amount of carbon that could be saved on the x-axis. And all the forestry options are in the highlighted section. And part of the reason for them being good value is because of the non-market benefits they provide, a couple of which I'll run through, and here you can see them. And they're very varied, from flood alleviation to improving water quality, and of course recreation that was focused on earlier, and very important this is. So there's plenty of them. And trees do play a role in flood risk management through a number of physical processes, but we need to make sure that we don't overclaim and underdeliver. Floodplain woodland, riparian woodland, and wider landscape planting all have a role to play. And for wider landscape planting, conifer woodland is generally more effective than broadleaf planting, as it has a full canopy throughout the year and has a higher water usage. The role of woodland in flood risk management is generally achieved in smaller catchments, less than 10,000 hectares. And there's a forthcoming UKFS practice guide on forestry and flooding, which will help in woodland design to realise the flood risk benefits. In 2018, only 16% of surface water bodies were classified as good in good ecological status, with many failing as a result of agricultural diffuse water pollution. Now, forestry is not seen as a major pressure, with less than 50 out of 6,000 failing as a result of forestry. Forestry is a low input land use, and either as an alternative income earning land use or acting as a barrier to absorb pollutants, can help to reduce concentrations of nitrates, phosphates, pesticides, sediment, and fecal indicator organisms. Land use change is needed to meet water quality objectives, and forestry has an important role to play because it is an alternative, low input, revenue generating land use. So I've been through why we should be planting woodland. Now onto some of the more challenging aspects, including my own perceptions as a land and woodland owner, and what the Forestry Commission is doing to make the process more straightforward. There are landscape implications, protected landscapes, working with air and bees and national parks. And these are really important areas, and we have to consider the objectives for those areas. There's, of course, owners' aspirations. There's alternative land uses, such as sheep farming, and environmental constraints, such as deep peat and upland birds. We amended the low-risk map for afforestation to help direct woodland creation to less sensitive sites. And that is the way to speed up the process and make the whole process more straightforward. But this does not mean that woodland planting is not possible outside low-risk areas, but it just gets the thumbs up in these areas. And we'll continue to update the low-risk map and improve the evidence on which to base assessments of site sensitivity. Getting mapping right is really important, as it's the easiest way to guide us. And here we're working with the whole of the DEFRA group to improve this. These three areas of active policy development will play an important role in determining where it's considered appropriate to establish new woodland. We're working to provide clearer guidance on these important areas that will be supported by our new woodland creation guidance, which will set out what we expect to see in woodland creation plans, helping those proposing new woodland creation schemes to collect the necessary information and present it in a way that will facilitate schemes gaining consent to plant. We'll also make sure that we present modern forestry positively and protect habitats and the environment. The UK Forestry Standard sets out good practice, so let's ensure we do what we do to practice it. Let's ensure that we do what we need to practice it. We must learn from some of the mistakes of the past. And in forestry, I'm afraid they hang around for a very long time. There's a lot of guidance coming out in the near future, which I hope will prove helpful. And these, along with the partnership approach, such as the Northumberland Forestry Partnership, getting all interested parties round the table. And I hope this will help to speed matters up, because it's really important that not only do we plant the right trees in the right place, but that we can do so with speed. So thank you very much indeed.
Sir William, thank you very much indeed. I am mindful how frenetic your diary is, and thank you very much for giving up your time today. It's greatly appreciated. This brings us on to our last presentation of the morning. John Gallagher is forest ecologist at Tilhill. John originally started his career with the Nature Conservancy Council in the Lake District, and then with Scottish Natural Heritage until he joined Tilhill in 1999. John has been the lead ecologist for Tilhill for the last 20 years, providing advice on ecological matters from habitats, protected species, pollution, new planting schemes, and environmental impact assessments. His wide-ranging experience is key to Tilhill when it comes to a client's desire for woodland creation. John's paper today is entitled Perceptions of Woodland Creation. Thank you, John.
Thank you very much, John. I haven't heard Sir William's talk, but it leads on incredibly well into mine, which is fortuitous. I want to take everyone back to the Forest Market Report. And we've seen this graph, I think, several times in the various presentations. And what I want to do over the next 10 to 15 minutes is to look behind those statistics, those cold figures, and look at what I've been doing over the last 15 years in terms of woodland creation. In particular, I want to look at large-scale woodland creation projects in Scotland, I have a premise that it's the large scale schemes that will help us deliver the government's targets, or as the government like to call them, aspirations. And after all, you know, that experience in Scotland is based on, well, 80% of woodland creation in the UK is happening in Scotland, as we've seen in previous presentations. So what I want to look at is large inward investments from financed by the private and public sources. I also want to look at, in terms of these big schemes, these larger schemes, they are about the 1,000 hectare mark, and they are typically, and we've heard this term before, that they're found on marginal hill ground. These are sites that are managed usually by long-term sheep grazing. They've been modified by sheep grazing. We heard Fenning talk about the baldness of some of these hills, and the impacts of sheep can be detrimental ecologically. And much of this ground in the marginal hill ground areas is probably drained as well. And I'll be looking at that too. Typical area of marginal hill ground. This one happens to be in the Yorkshire Dales. We've got a little project ongoing there at the moment. So what we have is a mix of acid grasslands, wet marshy grasslands, maybe peatland on the top, remnant heath if the sheep haven't eaten it all. So this is the sort of ground we're looking at that comes on the market, and forestry investors find themselves competing for this sort of ground. When that sort of ground comes up, I'm asked, or other folk in Tilhill are asked about, you know, what the risks are. What the environmental risks are, and by implication, what the investment risks might be in buying a piece of land. And Sir William touched on some of the wide range of sensitivities, from triple SIs to areas of outstanding natural beauty to special areas of conservation, etc., etc. So what we undertake when this sort of land comes up is something we call a due diligence approach. So this approach, we feel, manages the investment risk, and I should say reputational risk as well, because if we get this assessment wrong, it kind of impacts on reputation. So again, I might come back to that point. So in all of this, when this sort of line comes up, the most important decision is the one at the outset. Is this area suitable for woodland creation? We assess this using available data sets. There are various platforms on the internet which we can interrogate to find out about bird interest or archaeological interest. We can find out about the soils. So there's a lot we can find out about a site. But there's a key phrase we use, and it's the absence of evidence isn't evidence of absence, which really means there's things we know at the outset, and there's some things we don't know. And essentially, the things we don't know, we need to survey for them, and we need to understand the site and identify sensitivities through field survey. From those surveys that are undertaken, we go through what we call an iterative design process for the woodland, and through time the design starts to reflect those sensitivities. So what we're talking about in terms of these surveys to understand the site, and you should bear in mind these aren't surveys just for the hell of it or the sake of it. These inform our approach, and they're absolutely key to producing pulling a scheme together that fits in the landscape and responds to the information that's brought to us with these surveys. So these surveys might be botanical surveys. You know, they might be assessing priority habitats, particularly peat and peatland habitats. There's something new on the agenda called groundwater dependent terrestrial ecosystems, which are the groundwater flushes, which are important ecologically. We might be undertaking breeding bird surveys. In fact, we might be undertaking winter bird surveys. And the key things that we look for are red and amber listed species. Now, these are species that have gone under population decline and range decline, so end up on the red and amber lists, and people get very excited about them. We undertake soil surveys. This tells us something about the site capability, and that's a reference back to Sir William. Is the right tree in the right place? And the soil surveys will help us determine species choice. We also undertake something called landscape and visual impact assessments from agreed viewpoints. These are viewpoints agreed by or with the regulators and with local communities sometimes. And again, it's getting the woodland to fit in the landscape. Really important on the bigger schemes, those large scale schemes, that the fit is important. And we may undertake protected species surveys. We haven't done beavers yet, but we certainly do things like badgers and otter. I mean, these are not game changers in terms of woodland creation, but we need to take those species into account, bearing in mind we're doing a lot of this work against a backdrop of not only a climate change emergency, but a biodiversity emergency as well. And we also undertake archaeological surveys. Historically, a lot of these larger woodland creation schemes would have been caught under what we call environmental impact assessments. This was usually, my feeling, this was usually as a dumping ground for the regulator. A regulator who was often risk averse. So, you know, why not just put everything into an EIA and they can think about it later? But it then gave us the problem of pulling a large and complex EIA together. These were multidisciplinary efforts. You see the one on the right was produced in 2016, and we have a whole host of people there from bird surveyors, vegetation surveyors, protected species surveyors, agricultural economists, landscape architects. So you don't put one of these things together lightly or easily. And through time, bearing in mind, we probably started our first EA about 2009. They were getting bigger and more complicated. Certainly by 2016, the industry was making its views known to government that these were becoming unwieldy, and the government produced the McKinnon report, which reported back at the end of 2016, which was an attempt by Scottish Government to streamline the system and not make the EIA the default. The EIA is still with us, but we've not seen it being invoked for at least 2 or 3 years now. So the Scottish Government doesn't want EIAs, nor do we, and I would say nor do you. What we do now is work through something called the issues log, which we try to resolve issues as we go through the survey process and pulling a scheme together. And the issues log looks for avoidance of sensitivities or ask us to demonstrate mitigation measures. And we can do this, if you remember, we hold the data, we hold the information on our surveys. We're in a strong position to put in mitigation measures and get the regulator and others on side in terms of the woodland creation. This is a photograph took when I delivered an EIA to the regulators back in mid-2016. I think it's a truism that a photo is worth 1,000 words. I think this tells you that the system wasn't particularly working well in terms of EIAs when you have to deliver one using a barrow. I should say that's actually 3 EIAs, not just one. So I mentioned the iterative design process. That means we respond to what we find. the surveys we undertake inform the design process, and where sensitivities arise, be it archaeology or breeding birds or important priority habitats, we aim to avoid or mitigate for sensitivities. One has to bear in mind that not everything can be mitigated, and this is a plea to the regulator to understand that not everything that crops up as a sensitivity can be mitigated for. So when we have a woodland design, I'm reverting back to some figures here. If we look at some of these bigger schemes, this is an estate which happened to be 1,400 hectares. You see that figure at the top here. And we end up with something like over 400 hectares of productive woodland, probably slightly more. But as an ecologist, what interests me are the figures for native woodland. And in this case, you see 15% of the planted area, or 16%, is native woodland. And then you also see an area of Scots pine of 3%. And under the UK forestry standard, new schemes are expected to provide a minimum of 5% broadleaves. In my experience over the last 15 years, I don't have any scheme that's gone as low as 5%. And typically, the percentage of broadleaves is much higher as part of a native woodland network and as part of riparian woodland development. And if we were a particular charity, say Woodland Trust, they would probably be banging on about the amount of native woodland that's been created, but we just get on with it. We do it as part of what, in this case, a productive woodland. The other key figure in this is the one at the bottom. This is the area of open ground, which might be seen as a lost opportunity. I would turn that round and say, you know, some of this open ground can be positives, and it's maybe the sort of stuff AJ was talking about in terms of ecosystem services, natural capital, that some of this upland stuff, unplanted stuff, is unplantable anyway because it's maybe too high, the soils are too thin, it's above the planting line. So you know, we see this land as, in my view, and an ecological view, as something positive. It's where we can do things like habitat restoration. You might call that rewilding. We've seen schemes where we've undertaken peatland restoration. Often we get focused on woodland creation onto the colours showing the woodland creation. This is a negative of that, and this is showing the site where I just showed the figures for. This in the grey areas is showing the areas of land that isn't planted. And I think sometimes this is an important map to show the people who are sometimes opposed to woodland creation, that they get focused on the land that's been planted and miss the wider picture. You know, what's happening in the land that isn't being planted. If I can go back to this question of absence of evidence is not evidence of absence. This is a photograph of obviously a golden eagle that did cause some issues back in 2014, 2015. We were developing a scheme in terms of due diligence. We knew eagles had nested in this area that had come up for sale. But we also knew that the eagles hadn't nested on this ground for at least 40 years. Come to the point of purchase and the change of ownership, you can guess what happened. The eagles decided to nest again, and it turned our woodland creation plans upside down. I would say it didn't stop the woodland creation plans. It caused us to have a good look at those plans and build the scheme essentially around the core area around the nest site for the eagle. I also should say, in terms of this photograph, this eagle taken out the nest under license, had a satellite tag attached to it, and that's key information as well, because we can use the hard data from the satellite to see how eagles use sites, particularly in the west coast of Scotland, where it is a big issue for us, woodland creation and eagles, because they need such large areas of open ground. But the narrative round eagles historically was open ground good, woodland bad. What satellite tagging tells us is that's not necessarily the case. We know eagles and white-tailed eagles as well use our woodlands to nest, work around them in the nest there. They use our woodlands to hunt. We know that they're hunting from satellite tag data on woodland edge. We know they hunt in new woodland creation. We know they hunt in restocks. So there's real world data coming through this satellite tagging information, which gives us a much better handle on how eagles use the land from what we used historically was a modelling approach. We also go as far, in this case, this is a site on the west coast of Scotland, where we used viewshed data from the Erie, which is shown as the little asterisk. We used viewshed data to see what the eagle saw from the Erie, and from that we were able to produce method statements that minimized disturbance to eagles during woodland creation operations. That's how far we go to get these schemes through. That's how far we go to accommodate these incredibly sensitive species, and in the case of the eagle, an iconic species. Something Stuart said really struck me was that we're not a one-trick pony. And I think if you think of the figures in terms of these larger schemes, so if we use a rule of thumb in terms of 1,000 hectare site, my rule of thumb is we might get 60% of that planted, and what do we do with the rest? And so I think we think of woodland. It's not just about woodland creation. What we're doing, especially from my point of view, it's the other aspects of how we deal with the land that's not woodland. And here we have a slide showing an area that we've been restoring. So what you see is really intense drainage from agricultural drainage that was funded by government in the 50s and 60s, resulting in ecological damage to that habitat, resulting in hydrological damage, so that the peatland dries out, starts oxidizing, and releases its massive carbon stores. When we did the analysis of this open ground above the new woodland, we had one 200 hectare plot that showed 42,000 linear meters of drainage. So they were really busy back in the 50s and 60s. On the encouragement of the owner, in fact, we tapped into Scottish Government's Peatland Action funding programme and undertook at the end of 2017 into 2018 a large-scale, over 350 hectares, a large-scale peatland restoration programme. Every green dot there represents a peat dam. What is a peat dam? Well, it's something created by this machine on the left. They will dig down to get the most humified peat and create a series of dams along those drains every 10 to 15 metres. And what happens is the water starts backing up. We're not stopping the water leaving the site, we're slowing it down. So what you might want to think about is we're recreating a lake on top of the hill that's slowing its water down very slowly. So we're improving catchment resilience, and we're getting that peat active again so that it begins to store carbon. And I'm aware that there is now, as well as a woodland carbon code, there's a peatland carbon code. So this could be another income stream for owners. And turning to that photograph on the left again, it it strikes me that the machines did the damage in the 50s and 60s. We're getting them back out to undo that damage. Carbon in a response to climate change. One reason the owner in this particular case was keen for peatland restoration. His catchment, we knew, was there was two hydro schemes put in in tandem with the woodland creation scheme. So they were tapping into the two catchments within this particular property. The owner did know through hydrological assessments that had been done for him that it was a very spatey catchment. When it rained, the water ran off quickly, but equally dried up fairly quickly. So he was keen on the restoration of the peatland habitats above the catchment to get a more consistent flow off the catchment. I think the sort of stuff we've been talking about today, I think it's key in my mind, especially the whole debate around natural capital, that we spread this word. Stuart mentioned the biodiversity report. We're getting that out there. That these, if you like, large productive schemes are more than just productive woodland. There's all sorts of other benefits, including habitat creation, including flood alleviation, catchment resilience, including ecological enhancement, and public access provision. But I think the onus is on us. The onus is on the industry to get this message across. This is a photograph of me presenting at a public meeting when locals were raising concerns about woodland creation on the hill above them. I know they're hardly riveted to their seats, but still, I think we have to make the effort to get out there and widen the debate and change the narrative. Sometimes the adverse narrative Sir William was talking about that still haunts us in terms of commercial woodland. And we need to seek balance. So the three-legged stool that forestry sits on is sitting firmly on the environmental, economic, and social benefits. And truly sustainable forestry has to reflect those benefits. However, the rejoinder there would be that this balance varies by site and by the owner's objectives. What have I learned in the last 15 years doing woodland creation? I think the industry needs to ensure we select the least sensitive sites. Again, I think what Sir William has shown, the opportunities map directing, on England anyway, directing forestry to the least sensitive sites is a big step forward. We need to develop woodland creation projects that reflect site sensitivities, and we do this by the range of surveys we undertake so that we get it right first time. What have I learned in terms of the regulatory side? The regulatory side would be Scottish Natural Heritage or Nature Scot now, or Natural Resources Wales, or Forestry Commission England, Natural England. The regulator needs to, I think, encourage a culture of can-do. And I think the culture is so important that we have a can-do culture. They need to be mindful of timescales. We need to reduce timescales in terms of getting schemes through, and they should be there to encourage facilitation. By this, I'm not saying we want a free ride, because that wouldn't help anyone. We still need regulation. We need to get it right. And also, I think we need to understand that all or everything we do, in fact, has an impact, not least woodland creation. And I'm absolutely certain that few of our schemes, especially the bigger ones, would go ahead without compromise on both sides. So not all sensitivities can be avoided or mitigated for. I think that's something we need to bang home at times. And for the regulators, the key decision is that do the benefits outweigh the disbenefits? And I think we hammer home the benefits in terms of the wider discussion around natural capital, which I think is changing the narrative for us. Thank you.
John, thank you, and thank all our other speakers of today. I'm mindful that we have run on quite a bit time-wise, and we will push on as quickly as possible. I will wrap the session up at 12:30. I appreciate that's half an hour after the scheduled finish time. People have been asking quite rightly, where do we get a copy of the Forest Market Report? At 12:30, everyone who's been party to this session today will receive an email, and you will click onto that, which will take you directly through to Tilhill or John Clegg Co's website, and there will be the Forest Market Report 2020 report. We've got the 6 panelists now, joined by 2 more of our colleagues. Firstly, Tim Liddon, Forestry Director, Tilhill. Till grew up with forestry in the southwest of England, where his father had a forestry business. He graduated in forestry from Aberdeen and went on to join Tilhill as a forest manager. He has worked in a diverse range of operational work, from landscaping, community woodland creation to investment and estate forestry. In his time in Yorkshire, he was chairman of the Yorkshire Division Royal Forestry Society, 96 to 98. In 2001, he moved to southwest Scotland and later became a founder director of the Conifer Breeding Cooperative. In 2015, Tim was appointed as Tilhill's forestry director. He's a fellow of the Institute of Chartered Foresters. And last but not least, my colleague Edward Daniels, head of forestry here at John Clegg Co. Previously a chartered accountant, an investment manager and environmental fund manager, Edward has spent the last 10 years investing in commercial forestry and renewable energy projects. In 2010, he joined FIM Services Limited and focused on the investment appraisal of commercial forestry. Ed has built up substantial experience in the identification, appraisal, acquisition, and long-term management of forestry properties. So with 8 panelists, ladies and gentlemen, I hope there are no questions that will remain unanswered. I'm mindful that Sir William has to leave very shortly. So if I may, I might start with 2 quite similar questions, Sir William. And if you could answer these 2, perhaps with one answer, that should then get you off the hook for the rest of the morning. So firstly, from Eric Walters, it seems that agroforestry could be part of the solution to the climate change challenges that Fenning mentions. But are the regulations in place for forestry to embrace agriculture, or vice versa? And the second question that comes from Eddie Addis, is there potential to blend farming and forestry support systems into a land use package?
Well, thank you. In response to the second part of that, the key to this is the new environmental land management scheme, which is in the process of being sort of coming out. And the concept of that is to look at the whole holding. And if that is the case, yes, I think it is important that we don't split agriculture and forestry, because in England, actually, it's totally intertwined. I'm both a farmer and a forester. I have farm woods, I have larger blocks of more commercial forestry, but it is the same holding and they need to be managed in the same way. And it is absolutely key that we are able to use the environmental land management scheme to get our woods into management, because one of the things that I find most disappointing is the undermanaged woods that we have in England, particularly our broadleaf woods, which we really do need to focus and bring into management. Agroforestry, as a farmer, I always find agroforestry a slightly strange thing, because actually farm woods are just part of what we're currently doing. Yes, you can plant trees in the middle of fields. I think in arable farming, that is going to create real potential problems. And I say that as an arable farmer because, yes, we have a certain size of machinery at the moment, and you can do your planting around the drill width or the sprayer width and all of that. But actually, that will change with time. And I think you need to be very cautious in what you're doing as a farmer. But there's a lot of other things. I mean, for example, in grassland, there's lots of things you can do in planting fields and trees. Sorry, trees in fields, I apologize. But of course, if you have livestock, they need to be protected. And if you have cattle, that protection is expensive. I have experienced that a lot myself. I like planting trees in fields, and we put pretty substantial tree guards around them, but it does make it extremely expensive. So we need to look both at forestry and agriculture together, and I think that's really important. And it's also working with farmers and land managers, because you know the challenge we have of 30,000 hectares of new planting a year across the UK is very, very significant, and it requires all types of tree planting, both commercial, amenity, farm woodland planting and the like, in order to try and get near these targets.
Sir William, thank you, and thank you for your full contribution today. The next question, and I don't know who submitted it, but it reads as follows. The commercial forestry market has performed very strongly in 2020, despite the pandemic. Many purchasers identify carbon as a factor in their decision to invest. Do the panel consider this to be a strong driving force in acquisitions, and how is the carbon element of the price valued? Fenning, could you perhaps give me your views on that?
Well, the first thing to say is carbon payments, of course, are only applicable to new planting. So the sector of the market that might pay most attention to this would be those buying bare land with the hope for planting approval. However, I'm beginning to wonder whether this is a sustainable position and that ultimately all woodlands will receive some money for absorbing carbon. As I mentioned in my presentation, the yield class of restock crops is considerably higher than the carbon or the yield class of the original crops. That, by any definition, is additionality. So yes, with new planting, it definitely is a factor. Quite how people are valuing it, of course, is, I think, in the eye of the beholder. Some of the carbon contracts were 40, 50 or longer years in time, and you sold them at a lump sum up front, probably based on the current carbon price of a few pounds per tonne. That meant that the woodland owner was now taken completely out of the future of the carbon market. And what we've seen this year, or last year rather, it started, the English auctioning of carbon, the price is steadily rising. And most woodland owners would want to benefit from that. Now there's an ability, once you've validated your new planting, that you can sell either all or part of it to give you a phased, it's not quite an income, but a phased capital receipt. But the development I would really like to see with carbon is the ability for an annual payment. And on that basis, you could see that encouraging farmers to consider trees much more positively, because farmers need an annual income. In terms of how it's being valued at the moment, I think it very much depends how you look at it, what price you put on the carbon per tonne, and when you think you might sell your validated crop. I hope that helps.
Thank you, Fenning. If I could ask all panelists to try and keep it short. We've got lots of questions, and if we can bang through with concise answers, that would be appreciated. The next question comes from John Varley. Again, slightly on the carbon side of things. Are the current carbon incentives on offer for commercial growers fit for purpose, in encouraging the dramatic increase in planting the government and society expects? If not, what can we learn from the carbon incentives in New Zealand and the emerging informal carbon markets in Europe between growers and large corporations? AJ, could you perhaps give us your views on that, please?
Yes, I think you're right that the voluntary carbon or markets remaining voluntary is not going to be enough to incentivize the enough planting. But I don't know what the plans are for kind of making that kind of trading mandatory, or at least certify it and accept it. But I think, yes, there is room for learning from other experiences. And the more the markets are developed, the more the prices will become closer to the kind of guidance prices that BEIS is providing or Woodland Carbon Code is providing and creating more incentives.
Thank you. Next question from Rory Gibson. The geographic variation in the value of mixed woodland makes sense. However, do you believe that the changes expected in agricultural policy will drive a further increase in this category, especially in Scotland, where the value appears to be below that of the creation costs in some cases? Tim, would you like to have a go? You're muted, I think, Tim.
An interesting one. I think the value of these mixed woodlands is really related to the I want factor. And certainly Scotland provides good value primarily because of a lower population. Whereas in the south, the values are significantly greater. Land is significantly more expensive and there's more people chasing it. So that would be my take on that.
Thank you, Tim. Next from Andrew Vaughan. Will the increase in forest values be sustained into future years? There's a good one. Ed, would you like to have a go?
Thanks for that. I think it's the groundswell of support for forestry, natural capital, and interest in this sector will maintain a strong interest in commercial forestry and mixed woodlands. So I think that that we've moved quite significantly, and there's probably an underpinning of value at the moment. We've had an extraordinary 2020, as Bruce has explained. Can it continue? I will caution against. I suspect that I don't know is the answer, but I think that people and investors believe that, and I think they're quite rightly to believe that there is going to be future value in some of the unknown revenue streams which will come from a piece of commercial forestry, mixed woodland, or new planting ground, or some sort of restoration project. So I think there is further value in there, but I can't see it continuing at the rate that it has done in 2020.
Thank you very much. Okay, I've actually got two questions here, again, very similar, just trying to get through them. Firstly, from Tom Barrow. In our crowded isle, with so many varied landowning interests with different objectives, a mass of designations and extensive policies, can we meet the 30,000 hectares per annum target as a common objective to benefit all? And from Peter Whitfield, what are the main barriers to reaching the planting targets, and what is needed to remove them? Particular reference to Scotland, ? Stuart, one for you.
Thank you, John, and thank you for those questions. I really like Fenning's statistic. earlier on, which was a 1% change in land use in the UK is 240,000 hectares. You know, we've achieved significant areas of planting in the past, but that doesn't mean that suddenly we're looking to plant every area of the UK. I think the key things for me are that there is a lot of suitable land out there. There's a variation, as was highlighted by John, in terms of the site sensitivities. But if we approach this on the basis that there's a real imperative around tree planting here, that we are going to have some trade-offs, and it's how do we manage those trade-offs, and we ensure that that's the right balance. And when you look at it in that context, I think there's an awful lot of land available. The challenge is it's owned by people who we have to encourage to want to plant. You know, we create these opportunity maps where planting might take place. What we don't do is we knock on people's doors and say, congratulations, you've been identified as somewhere we're going to plant trees. The guys are coming around on Monday, we'll get it all in over the weekend. You know, we are looking to incentivize people, and that's the key thing. And that brings me on to Peter's point. If we're going to make this work, the process needs to be, you know, financially attractive. You know, we need to then have the systems in place where we can manage those trade-offs. And to be blunt, we've got to be much more effective with the regulators in making those decisions quickly and getting on with it, because there is a lot of suitable land. If we get those things right, is it achievable? Absolutely.
Stuart, thank you very much. You actually answered about 3 or 4 other questions in your same answer there, which is helpful. I've got a question here from Jeremy Prescott, which reads, how can private investors get involved with new planting projects? Bruce.
Basically 2 routes. One is to buy up a piece of land for yourself, or if you own some land, get involved in planting it. There are patches of land coming up at all scales. As John Clegg Co explained to us, not necessarily all of those are going to be plantable, so I would certainly advise speaking to somebody like ourselves or our friends at John Clegg Co to go through the basics to make sure that you know what you're getting. There are other alternatives, getting involved with some of the funds that work in this area as well. But then, of course, then you're only part owning rather than owning for yourself. But it's an area that I would say requires specialist advice because, as John said, it's not a straightforward process.
Thank you very much, Bruce. I am, as always, very mindful of time. I think we've got time for one more. And the question is, will forthcoming agreement on the natural capital accounting reporting standard help accelerate land use change to meet climate change targets? We've spoken a lot about this, but I think it's perhaps an interesting one just to finish off. And AJ, if you could perhaps give us an answer there, please.
I think there needs to be a lot of factors addressed for those targets to be met, as we've been talking about. So standard will address some of those, where lack of information and concerns about maybe approaches, transparency, comparability of this kind of accounts have been a barrier. The standard will address those barriers and help move things along. But where the barrier is that there are markets and we're finding difficulties, having understood what the benefits are, we're having difficulty turning them into financial returns. I'm afraid that's beyond the capability of a standard. But it'll definitely make things clearer for people who want to do accounts.
Lovely. Thank you very much, AJ. And again, thank you to our 6 speakers this morning and our 2 additional panelists at the end there. Thank you very much indeed. As stated, the Forest Market Report will now very shortly, the next couple of minutes, be sent to you in the form of a link where you can go in and download that report. As previously stated also, I do hope you've enjoyed it. I'm sorry we're not there in person, but the technology works some of the time, most of the time, and I hope you've received it loud and clear at your end. If there are any outstanding questions, please feel free to contact us at Tilhill or at John Clegg Co, of course, and we will do our very best to get those answered. I hope you've enjoyed it. Thank you and goodbye.